Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, September 24th, 2018. Do you know why I have this smirk on my face? Or why I'm kind of smiling? Because right now, I am getting exactly what I wanted and what I hoped for. I explained to all of you yesterday when I did my Sunday blog, Markets a Look Ahead. What am I talking about? I said in that video, I hoped that stocks would sell off a little bit or give back some of the gains that we put on last week. Now, I'm not talking about anything dramatic. As I am doing this, the Dow Jones Industrial Average is down about 80 points. The NASDAQ is taking the biggest hit of all the major indices right now. These are geopolitical issues affecting the markets, no doubt about it. But I'm a happy guy, however you want to look at it. I wanted this market to sell off. I was hoping it would start to sell off a little bit. I personally would like to see this get worse throughout the day, maybe even into tomorrow. The market needs to give some back. That's my perspective. And you know, if you understand these markets, that's how they work. You know, markets make a big run up. You got to give some back to make another move higher, even in completely fake environments like we have now. It's the truth. A couple of other things going on here too. Gold and silver are catching a little bit of a bid. I discussed this yesterday again in my Sunday video. Even though these markets are absolutely fake, I'm talking about the precious metal markets, there's no price discovery mechanism behind them whatsoever. If you look at those charts like I covered yesterday, it looks like we may be bottoming out here. Now, I'm not saying that this is it. This is a bottom, because we've seen some pretty incredible things go on here with regard to the paper derivative market. So, and I have no faith in it whatsoever. I'm sure you don't either. That does not mean we still have to understand that this environment is fake. It is not real. We exist under the largest bubble the world has ever seen, the debt bubble. Bet against that debt, become your own central bank. That means acquiring the hard asset. You know that. I a million times, 2 million times I've said that over the years. That's the truth. Cryptocurrencies are under a little bit of pressure here as well. Cryptocurrencies are very difficult. I think, if you recall, if you follow this blog, I've explained to you that I've lost the ability really to put any kind of real price on these things right now. But with that said, they have played out like I said they would over the last month or so. And I think that's kind of interesting. Now, this week, we have the Fed. We're going to hear from the Fed Wednesday. This, in my opinion, is going to be a non-event for the markets. Now, a lot of you, I was just going through my emails this morning, talking about the Fed, believe that this has the potential to rattle the markets. I don't see it that way at all. This is how I believe this is going to play out. We will get a rate hike this week. It's priced in. It's priced in. Just like the China tariffs were priced in, the markets went up. I would not be surprised to see stocks go higher. This is just my take on it, and I could be wrong. I'm just telling you how I see it because I believe it's priced in. We're going to get that 25 basis point hike. If the Fed does 50, I'm not even thinking about that. If the Fed were to do 50 basis points to the federal funds rate, that would not be good. That, I don't believe that's priced into the market, and that would, no doubt, put pressure on stocks. But a 25 basis point hike is priced in. Now, let's talk about that a little further. As I am doing this video blog, again, the dollar is under a little bit of pressure. This is something that we want to see. I explained this to you yesterday. We want to see the dollar get a little weaker. Now, bonds are selling off a little bit, but again, you know there's that compensatory mechanism that exists between the dollar and the 10-year yield. So that's not affecting the market too much here. However, we got to keep our eye on that. You know that, and you can watch this live right on my lovely website. There is a link in the description of this video, right side of the page. Please check this stuff out. And make sure you watch that gauge at the bottom of my page at the center. I told you it's never been wrong. And I would be shocked if and when it is wrong. So again, stocks are under a little bit of pressure here. This is exactly what we wanted to see, or at least what this guy wanted to see right here. I explained this to you yesterday. I'd like to see more pressure than we're getting here. Maybe throughout the day, maybe even into tomorrow. But we'll see. At least we're getting some, and this is important, at least in my view. We needed to give back some of the, frankly, ridiculous gains that we had last week. With regard to metals, if this were real, we would be bottoming out here. But again, I'm not making any kind of, I'm not drawing a line in the sand here with regard to precious metals because the paper derivatives are not real. We also have the London gold fix. Every day, the major banks here decide what the price of gold should be. And that's just, it should be illegal in my view. How can we have a free market if the price is being fixed by banks? I don't understand that, but again, I think that's our strength as well, understanding. I mean, it's right in our face that the metals market could not be more rigged than it is, and all they're going to do, world central banks, is inflate and inflate and inflate. So you tell me where we should be with regard to gold or silver. I think that's important. Keep your eye on the dollar. Keep your eye on that bond market. All right. With all this said, I'm going to stop. A lot of stuff going on here. And we will reconvene in this lovely spot later on today. It's going to be lovely.